Yeah. Hello friends, very good morning. I'm Vipin Bora. I'll be taking lecture on process costing. Now, please focus a very important chapter from examination point of view. I'll take last 15 minutes for all your queries. I'll address all the queries in the last 15 minutes of the session. So I suggest you to please focus on what I am teaching right now. So let's start. Process costing. Now, what is process costing? This is a method of costing used in industries wherein the raw material, that is the input, has to pass through two or more than two processes before being converted into final product. Again, I repeat, what is process costing? It is used in industries. It is used in industries wherein the raw material has to pass through two or more than two processes before being convertible into final product. Let's discuss this with the help of a very basic example, very simple example. Suppose I am the manufacturer of branded shirts. Everything is in-house. Right from start, let's say from purchase of cotton till the ready shirt, everything is in-house. Now, admin, please focus over the board. So suppose I do purchase cotton. Now this cotton is the input. It will be transferred to my first division. The first process, say conversion of cotton into thread.
Are you showing anything?
They will incur all the necessary cost. They will incur all the necessary cost to convert cotton into thread. Now once the thread is ready, it will be transferred to the next division, the next process, that is fabric manufacturing division. Again, they will incur all the necessary cost, whatever the material, whatever the labor, whatever the overheads they will incur, and convert that thread into the fabric. Now again, once the fabric is ready, they will again transfer it to the next division, let's say finishing and processing of fabric. Again, finishing and processing activity will go on in this process, and once the fabric is ready, it will be transferred to tailoring and stitching division. And once this tailoring and stitching activity is complete, my final product is ready, that is my shirt. So, from converting cotton into a final product, that is shirt, there are various processes involved. That's what we do in process costing. As the name suggests, process and costing. This is a process of conversion of cotton into final product, that is shirt. And in this process costing, we calculate the cost of each process. Say first process, second process, third process, fourth process. So what we do in process costing? These are the various processes involved in the manufacturing of the shirt. And in this technique of process costing, we calculate the cost of each and every process.
Hello.
So again I repeat, what is process costing? It's a method of costing. Yes, sir? So what is process costing? It's a method of costing used in industries wherein this raw material cotton has to pass through various processes before being convertible into final product. So now, again it's a very important chapter from examination point of view. So let's start. I hope the things are clear now. Now, these are the points what I will be discussing in this chapter, that is meaning of process costing I have already discussed. process loss and process gain, that is normal loss, abnormal gain, valuation of work in progress, and equivalent production, and the last inter-process profits. So all these points will be covered under this chapter, process costing. We'll be discussing each and every point one by one. The first point I have already discussed, that is the meaning of process costing. That is, the process costing is a method of costing used in industries where the material has to pass through two or more than two processes before being convertible into final product. Now, since each process is unique, each process is different, so separate process account is to be prepared for every process. Again, I repeat, since each process is unique, each process is different, so separate process account is to be prepared for every process. It means focus on the PPT. Now here in the PPT, see the input, that is raw material, it is transferred to process 1. They will incur all the necessary expenditures as I discussed. The output of process 1 is to be transferred to process 2. And again, the necessary expenditures will be incurred in process 2, and the output of the process 2 is finished goods. So let's proceed further. Now, how to calculate the cost of each process? What is the basic pro forma for each? Process? So what you guys have to do? Very simple. I have mentioned in the PPT, debit all the expenses. Whatever the material input, labor, overheads, other expenses, debit all the expenses and credit the output of the process. Credit the unit produced, that is by process 2. That is, whatever the production is, it will be transferred to the next process. The abnormal gain, abnormal loss, normal loss, I'll be discussing it separately. So right now, let's keep the things very basic. So debit all the expenses, that is material, labor, variable overhead, fixed overheads, other expenses, everything, debit side. And whatever the units are produced, that will be transferred to process 2. So herein, the process 2 is the output of the output of process 1 is to be transferred to process 2. Again, in process 2 account, we'll first write the input from the process 1 and again all the necessary expenditures incurred, let's say material, labor and other expenses. And herein, the output of process 2 is basically my finished. So I hope the pro forma is clear. Now let's discuss this process with the help of a very, very basic examples. I've shared it in PPT and study notes. Now, example 1, basic. From the following data, prepare process account indicating the cost of each process and the total cost. The total units that passed through each processes were 250 for the period. Particulars is given. Material, labor and other expenses for process 1st, 2nd and 3rd. Now, indirect expenses amounting to rupees 85,000 may be apportioned on the basis of direct wages, that is wages. There was no opening and closing stock. So now I'll be discussing this question over the board. So please focus. If you want to copy this example, please copy. Everyone. The cotton, conversion of cotton into thread, from thread to fabric, fabric to finished fabric to tailoring and stitching division, and then the final product. You guys can copy it. Now, let's start the first example. Now, as per the pro forma which is discussed in the last slide, we'll be following that pro forma only. So let's start. particulars. So now, as discussed, debit all the expenses. Material.
Vipin sir, sorry to interrupt you. Please,
two material, 240 units,
font size will be much, bigger size. Please use the bigger font size. A bit bigger font size.
Sir, I have actually used it. I have actually used a bigger font size, sir.
Unable to see the board, I don't know. Unable to see the board.
Material 240 units.
Mr. Vijay? बोर्ड दिख नहीं रहा है. अच्छा, मेरे को दिख नहीं रहा है, पता नहीं. अच्छा, मैं तो ब्लू जीन्स में ही हूँ, उसमें नहीं दिखेगा क्या?
Now two material 1,50,000. Two labor 80,000. Two other expenses 26,000. Now, since there is no normal loss, abnormal loss, the output of 240 units will be transferred to process second. The total cost incurred will be 1,50,000 plus 80,000 plus 26,000. So 2,56,000. Now, let's prepare process second. Again the same pro forma. Now, the output of process 1 will be transferred to process 2. To process first, 240 units, 2,56,000 the cost. Now the necessary expenditures are incurred in process second. So 2 material 50,000, 2 labor 2 lakh rupees, 2 other expenses 72,000. Now the output of the process second will be transferred to process third by process third. Now the total cost will be 5,78,000 for 240 units. Now next, we'll prepare process third. Now the output of process second will be transferred to process third. So to input $240 units and 5,78,000. Now the necessary cost to material 20,000. To labor 60,000. To other expenses 25,000. Now all the costs are incurred. Now the final output is ready for 240 units of 240 units by finished goods. The total cost will be 6,83,000. So herein the output of process 1 is transferred to process 2. All the necessary costs were incurred in the process, and thereafter the output of process second is transferred to process third, and once everything is ready, it will be transferred to finished goods, finished stock account. So I hope this question is clear. So a very simple chapter, a very simple pro forma, and I have discussed this question in detail, the example 1 basics. So I suggest you to copy the solution. Please. I'll address all your queries in last 15 minutes of the session. So right now I want you to focus on what I'm teaching, what I'm discussing in this session. Now, let's move ahead to another key topic, normal loss. A very important part of this chapter, normal loss. Now, what is normal loss? What is the treatment of normal loss? So now, let's start. What is normal loss? The meaning of normal loss. Now, this is inherent in nature. This normal loss is inherent in nature. It is bound to happen. We can't avoid normal loss. Let's discuss this with the help of a very basic example. Suppose I am the manufacturer of petrol, gasoline and diesel. I convert crude oil into petrol, diesel and gasoline. Now during this manufacturing process, few percentage is evaporated. I can't avoid it. So this is normal loss. Again I repeat, what is normal loss? The loss of material which is inherent in nature of work. We can't avoid it. Now this normal loss can be estimated well in advance. I mean many companies do estimate normal loss well in advance and keep a provision for it. So I hope normal loss is clear. Now what's the treatment of normal loss? Very simple. The cost of normal loss is absorbed by good units produced. Whatever the good units we are producing, the cost of the normal loss will be absorbed. Now if any scrap value is realized in this normal loss, it will be deducted from the total cost of the product. Again I repeat, please focus on the board admin. So what is normal loss? It is unavoidable, inherent in nature. What is the treatment of normal loss? Very simple. Absorb the cost in good units. If any scrap value is realized, it will be deducted from the total cost. Okay, let's discuss this normal loss with the help of a very basic example. I have provided this in the study material. Now, the material is 1000 units. The input is of 1000 units at the rate 100 rupees. 1 lakh. The labor is 1,50,000 rupees. The other expenses is 50,000. The scrap value realized for the normal loss is 12,000 rupees. And the normal loss is 10%. Prepare process account and the cost of good units transferred. So let's start. Now, the input of raw material, to material. The same pro forma which I have discussed in the last question. To material, 1000 units. And the cost is 1 lakh rupees. To labor, 1,50,000. Two other expenses, 50,000. Now, as discussed, as mentioned in the pro forma, the normal loss will be on the credit side of process account. High normal loss. It is estimated well in advance, so the normal loss given is 10% of the inputs. So my inputs are 1000 units. The normal loss will be 100. The scrap value realized will be 12,000 as given in the question. My output will be transferred to either finished goods or process, second, whatever it is, 900 units. So my total cost incurred is 1 lakh plus 1,50,000 plus 50,000, 3 lakh. Now, this scrap value realized will be deducted from 3 lakh. So the total cost of 900 units will be 2,88,000. So what we have done is this: we have incurred the cost of 3 lakh on 1,000 units, but normal loss of 100 units. Normal loss is 100 units. So this loss of 100 unit is absorbed by these good 900 units. Let's calculate the cost per unit. The total cost incurred is 1 lakh plus 2, 3 lakh. The scrap value realized is 12,000. The good unit produced are 900 units. So what will be the cost of good units? ₹320. So what is normal loss? Inherent in nature. And whatever the cost of normal loss is, it is absorbed by the good unit produced, that is 900 units in this question. Please copy the solution. Example 2. Let's proceed further. Now, let's start with abnormal loss, the next part of the chapter. Now, what is abnormal loss? The loss over and above the normal loss. The loss in excess of normal loss is what? Abnormal loss. Again, it is not estimated in advance. It is, we can't imagine that we don't expect that abnormal loss will happen. But yes, in sometimes, in certain situation, either due to carelessness of workers or bad plant design or whatever it is, abnormal loss occurs. Now, what is the treatment of abnormal loss? Not like normal loss. What will be the treatment of abnormal loss? The value of abnormal loss will be equal to the value of good units. The abnormal loss cost cannot be absorbed by good units, just like normal loss. In abnormal loss, whatever the abnormal loss is, we'll transfer it to costing P&L account. Again, I repeat, what is abnormal loss? The first point, it is avoidable. Why it occurs? Due to carelessness of worker or bad plant design or whatever it is. Now, what's the treatment of abnormal loss? The value of abnormal loss will be the same as of good units. And whatever the value of abnormal loss is, it will be transferred to costing P&L. Let's discuss abnormal loss with the help of an example. I have provided it in the study material. Example number 3, abnormal loss. A product passes through two processes, process first and process second. Material used in process first is 5,000 units at the rate 8, that is 40,000. Wages 30,000, manufacturing overhead 27,000. Normal loss was anticipated at 5% of input. Suppose if 4,550 units of output were produced and transferred out of process first, scrap value has realized ₹2 per unit. You are required to prepare process first account and abnormal loss account in this question. So let's start. The same procedure to material. 5,000 units, 40,000 rupees. Two wages, 30,000 rupees. Two manufacturing overheads, 27,000 rupees. Now, my normal loss is 5% of inputs. My total inputs are 5,000. So 5% of 5,000, 250 units. As mentioned in the question, the scrap value realized is rupees 2 per unit. So the total amount will be 500 rupees. Now, my output as given to be transferred to process second is 4,550 units. Now see,
Mr. Bipin,
total
Mr.
input
Bipin.
was of 5,000 unit out. Pardon sir?
एक तो थोड़ा font size आप बढ़ा लिखिए, increase the font size if possible, because it's not very clearly visible.
Okay.
Second, after each question, you please take out the query, because students are asking query on that question only. So instead of taking at last, after
Okay.
each question, you can see the queries also. Right?
Okay sir.
Okay. Carry on. Okay.
Total input is of 5,000 units, out of which the normal loss is 250 and my output is 4,550. So where is the difference? Calculator. So total input is of 5,000 units, of which 250 is my normal loss. My output is 4,550. So where is 200 units? It is my abnormal loss. Units. Now, what will be the value of these two? 200 units and 4,550 units. So now, as I told you, the value of these units will be same as the value of the good units. So let's calculate the value of now the total cost incurred is 40,000 plus 30,000 plus 27,000. $97,000. The normal loss is 500 rupees. The normal loss scrap value is 500 rupees. Now whatever the scrap value is realized will be deducted from the total cost as discussed in the previous question. So the scrap value realized 500 rupees. The scrap value is deducted from the total cost. Divided by 5,000 minus 250. That is 4,750 units. So the cost per unit will be $20.3157. $20.3157. So for 200 unit it will be 200 into 20.3157. 4063. And for 4550 units, 9244. 92437. So this is all what about abnormal loss. Here we can see that the cost of normal loss is absorbed by good units, whereas the abnormal loss cost is equivalent to the value of good units. Please copy. Guys, I hope you guys have copied the solution. Now, we'll discuss abnormal loss account also in this question. Now the total abnormal loss is of 200 units with 4063 cost. So, in process 1 I have written by abnormal loss. So here it will be 2 process first, 200 units, 4063. Now since there is a loss of 200 units, but these units will be sold in the market with a scrap value as mentioned in the question 2 rupees per unit. So we'll realize for these units, 200 units by bank. The scrap value realized will be 2 rupees per unit, so it will be 400. So for these 200 units, we will realize 400 rupees. Now, what about the balance loss? The balance loss will be transferred to costing P&L. Three six six three. The balance loss will be transferred to costing P&L. So process first, material, wages, all the manufacturing overhead, by normal loss, the balance of 200 abnormal, put 4550, the value of abnormal loss will be equal to the value of good units. Now in abnormal loss account, to process 1, 200 units, 4063 is the cost. We'll get a scrap value of 2 rupees per unit. So 200 into 2, 400. And the balance of 3663 will be transferred to costing P&L account. Now, I want to address few queries. I'm extremely sorry that in question number 1, I skipped indirect overheads. I skipped it from my end. You have to apportion indirect expenses in the ratio of direct wages. So it's my mistake. So I really apologize. It's an apology from my end. You have to apportion the direct expenses. Here it is. In the example 1, that is indirect expenses amounting to rupees 85,000 may be apportioned on the basis of direct wages. So I'm really sorry that I skipped that part in the question. So you have to apportion indirect expenses of rupees 85,000 in the ratio of 80 is to 200 is to 60. So extremely sorry, students. Now there is a query raised by a viewer, Timanna from Chennai. She has asked a question that can be mentioned as buy sale of scrap instead of buy normal loss when we credit for sales of scrap. No, you have to mention buy normal loss. If you want, then you can prepare a normal loss account, and in that account you can write down buy bank, that is buy sale of scrap. But in this process account you have to clearly mention buy normal loss. Please copy the solution, and extremely sorry for question number 1. I skipped to apportion the indirect expenses of 85,000. So I'm extremely sorry for that. You guys have to apportion 85,000 in the ratio of 80 is to 200 is to 60. That is in the ratio of direct wages. I'm extremely sorry for that. Please copy the solution. I hope the board is visible to all, so please copy the solution. Now moving towards the next part of chapter, that is abnormal gain. What is abnormal gain? Very simple. When the actual production exceeds the expected production, when the actual production exceeds the expected figure, that is what we call as abnormal gain. Suppose my input is of 10,000 units. I expected a normal loss of 10% on inputs. and I was expecting an output of 9,000 units. But when the actual results were out, my output was 9,200 units. Here in the given case, these 200 units are what? My abnormal gain. So what is abnormal gain? Very simple. When the actual production exceeds the expected production, this is abnormal gain. It may happen sometimes due to either, wrong in estimation of normal loss, or it may sometimes it is because of, say, productivity of workers also. Now, again, the value of abnormal gain will be equal to the value of good units. And whatever the profit derived, it will be transferred to costing P&L account. Again, I repeat, the value of abnormal gain units will be equal to the value of good units, and the extra profit derived will be transferred to costing P&L. So what is abnormal gain? It is basically the saving in normal, we can say. We are expecting a normal loss of 1,000. In the given case, that is the 1,000, that is 10% of input. But my normal loss was actually 800 units only. So what is abnormal gain? Very simple. It is a saving in normal loss. Let's discuss this with the help of an example. The same example of abnormal loss. Now, if the production is, say, 4,850 units, what will be the treatment? So let's discuss it again, the same question. Prepare process account. Two materials same. $40,000. Two wages. 30,000. Two manufacturing overheads. 27,000. By normal loss, 5% of input, that is 250. The scrap value realized is 2 rupees per unit. So 500 rupees. Now my actual output, that is to be transferred to process second. See, also answer if the output is 4,850 units. So my output, if it is 4,850, then see, let's calculate it is abnormal loss or abnormal gain. So 5,000 units, 250 is the normal loss and 4,850 is the output. So will it be abnormal loss or abnormal gain? $4,750 should be the normal production, but my production was 4,850. Again I repeat, 5,000 minus 250. 4,750 should be my normal production, but my production was of 4,850 units. So 100 unit extra, we call it as abnormal gain. So 100 unit extra is the abnormal gain. Now, again, how to calculate the value of these two? Very simple, the same funda. 40,000 plus 30,000 plus 27,000. That is 97,000 is the total cost. The scrap value realized is 500 rupees. I was expecting a production of 4750. So 20.3157 into 98,532. The value of these 100 unit will be same per unit. 100 into 20.3157. So it comes to 2032. So, 2 material, 2 wages, 2 manufacturing overhead, by normal loss, by process second. The abnormal loss of 100 unit, the value will be 2032, that is equal to the value of good units. Now, let's discuss abnormal gain account also. So 2 abnormal gain है इधर. So it will be by process first. 100 units, the value of abnormal gain is 32. Now, as I told you, what is abnormal gain? Basically the saving in normal loss. Here we have credited a normal loss of 250 units with a value of 500. But my actual loss was 250 minus 100, that is 150 units only. I was expecting a loss of 250 units, but my actual loss was of 150 units only. So here we will adjust the normal loss amount of 100 units. The scrap value realized is 2 rupees per unit. So the 200 amount is adjusted in this, and the balance will be treated as profit and it will be transferred to costing P&L account. So 2032 is the value of abnormal gain minus 200, that is the set off of normal loss. So our net gain is 1832. Please copy the solution. Now see, there is a query raised by Saurabh Gidwani from New Delhi. He has mentioned that, sir, if no amount is realized by normal loss in any form, then what amount is in normal loss? See, as I told you, if we realize any sort of scrap value, then only it will be shown in this table. If the no scrap value is realized, let's make it dash only, zero only. Again I repeat, if the scrap value is not realized, just write 250 units and dash. Another query raised by Abhinav from Delhi, how to calculate normal loss in this question. Now see, here in the question it is given that normal loss is anticipated to be 5% of input. So my total inputs are 5,000. My input is 5,000 and the normal loss is 5% of input. So 250 units, 5,000, 5%, 250 units. And here in the question, the scrap value given is rupees 2 per unit. So 250 into 2, 500. If no scrap value is given, then 250 and here you will write 0. That's it. I hope these queries are clear. Now there is a query from Aman Agarwal. Sir, explain the abnormal gain account again. Now see, here in process 1, 2 abnormal gain is given. One second, there are so many lines. I'll delete few. Now, my abnormal gain is of 100 units and the value is 2032. So if we prepare abnormal gain account, it will be by process 1, 100 units, 2032 will be the value. Now, as I told you that what is abnormal gain? It is a saving in normal loss. What it is? It is a saving in normal loss. So my normal loss is 250 and my abnormal gain is 100. So my total normal loss in general will be 150 only. So let's reverse the entry of the normal loss. So here 100 units is the abnormal gain. So the normal loss we will reverse 100 units into scrap value 2 per unit, 200 rupees. And the balance will only be abnormal gain. Now see, there is a query raised by Timanna also that, sir, abnormal gain is not a cost added to the process. Why do we include that to increase the cost of output? Now see, abnormal gain arises when the actual production happens, but all the costs are projected well in advance and normal loss is an estimated data. One more thing, abnormal loss may happen sometime, may not happen sometime. As I told you, it may be due to some sort of labor efficiency or maybe some or other reasons. So we generally keep the production cost per unit constant and it is based on the estimated data. That's why we have kept it like that. Mayur Kesha has raised a query from Bangalore. Why this 200 rupees? I'm just reversing the value of normal loss. That is the scrap value realized is rupees 2 per unit. So 100 into 2, 200. I have recorded by normal loss 250 into 500 as per my estimated data. Now my normal loss is reversed 100 into 2 again 200 rupees. So I hope all these queries are addressed. Now, I've given one example number 4 for practice, a full-fledged question with all the things I have discussed till now, that is abnormal loss, abnormal gain, normal loss. So I'll be discussing this question now. Since the board size is limited, so please adjust. So now, let's discuss the full-fledged question. RST Limited processes product Z through two distinct processes, process first and process second. On completion, it is transferred to finished stock. So the output of process second is transferred to finished stock. Now from the following information for the year 2021, prepare process 1 account, process 2 account and finished stock account. So let's start. Let's start with process first account. Now, again, the data given is particulars, process first and process second, raw material used at the rate of 67,500 units, transferred to next process, that is finished stock account, 7,050 units and, next process and finished stock account, 7,050 units and 6,525 in process 2. Normal loss is given, the direct wages is given, direct expenses are given, manufacturing overheads is given, scrap value per unit is given. Now 6,000 units of finished goods were sold at a profit of 15% on cost. Assume that there was no opening or closing stock of work in progress. So let's discuss this question. I hope by the end of this question, hopefully the concepts will be clear. So two raw material, or we can say input of raw material, whatever you want to write, you can write. 7,500 units. ₹4,50,000. Now, direct wages. ₹1,35,750. Direct expenses. %60 of direct wages. So 135,750 into 60%, 81450. 2 manufacturing overheads, 20% of direct wages, 135, 750 into 20%, 27, 150. Now, by normal loss, it's 5% on inputs. So my total inputs are 7,500 units into 5%, 375. The scrap value is given in question 12.5. So 375 into 12.5, 4687.5. So let's keep it 4688 only. Or we can keep it 87 also. Or you can take it in points also, it's up to you. Institute do accept all these things. Now, my output is to be transferred to process second. And it is given as 7050. Now, let's check whether there is abnormal loss or abnormal gain. So the total input is 7,500 units minus 375 normal loss. Now, I was expecting a production of 7125. Again, 7,500 is my input, 375 is my normal loss. So I was expecting a production of 7,125 units. But my production was of 7,050 units only. So yes, there is an abnormal loss of 75 units. Now, as discussed previously, how to calculate the value of these two? Let's start. My total cost is 4,50,000 plus 135,750 plus 81,450 plus 27,150, 694,350. Minus the scrap value realized is 4687 divided by 7,500 units minus 375 normal loss. So 7125 is my estimated production. So now 694,350 minus 4687 divided by 7125. So it's 96.7948. $96.7948. Just give me a break. Just give me 1 minute. So my total cost is 694,350 minus scrap value realized, that is 4687. 375 into 12.5. So 4687.5, I have taken it 4687. So 694,350 minus 4687 whole divided by 7125. So 96.7948 is the value. So now value of abnormal loss will be 96.7948 into 75. It comes to 7260. . 75 into 96.7948. So 7260. And the balance 682403. I hope till now the things are clear. This is already discussed in last few questions. To input of raw material, all the necessary costs, that is direct wages, direct expenses, manufacturing overheads, by normal loss, that is basically 5% of the input. So 7,000 into 5%, here is the value 4687. My process second output as given in question is 7,050 units. So the balance is the abnormal loss. Now as discussed, the value of abnormal loss will be the same as of the value of good units. So this is how it is calculated. So now let's move towards the next process account, process second account. I'm using the same performer till now as discussed, as mentioned in my PPT. Now, the output of process 1 is transferred to process 2. Yes, sir? Rejoin करना पड़ेगा. Okay, sir. Guys, give me a minute's time. Hello friends, hi. Now let's proceed further. So my process first account is ready now. My output of process first is to be transferred to process second of 7050 units with a total cost of 6,82,403. So let's transfer it to process second. So to process first, the input we will receive from process 1, 7050 units, 6,82,403. Now, we'll write down the further expenses incurred in process second. So, two wages, there is no material as such, so two wages, direct wages. $1,29,250. Direct expenses are 65% of the direct wages. $65% of direct wages. So 1,29,250 into 65%. So 84012. Again I repeat, it is given in the question that direct expenses are 65% of the direct wages. So my direct wages are 1,29,250 into 65%, that is 84012. Now manufacturing overheads. %, of direct wages. My direct wages are 129,250 into 15%. It comes to 19388. Now, as mentioned in the question, that normal loss is 10% on inputs. So by normal loss, that is 10% on inputs. So 705. 7050 into 10%, that is 705. Now again, the scrap value is given in question clearly. I repeat, if there is no scrap value in question, write down dash. But here in the given question, scrap value written as 37.5. So 705 into 37.5. Two six four three eight. It is 7.5. We can take either 7 or 8, whatever it is. Now let's see what's my output of process second. 6525 units. So buy. Now the output of process second is to be transferred to finished stock account. So buy finished stock account. How many units? 6525. Now let's see whether there is abnormal gain or abnormal loss. So my input was 7050. I was expecting a production of 7050 minus 705. So I was expecting a production of 6,345 units. But my actual production is much more than my expectation. That is 6525 units. So we call it as abnormal gain of 180 units. Now, my question, what will be the value of this 180 units and what will be the value of 6525? As discussed earlier, the total cost minus scrap value of normal loss divided by the estimated production what we estimated in advance. So my total cost is 6,82,403 plus 1,29,250 plus 84,012 plus 19388 minus, so the total cost is 915,053 minus scrap value realized 26,438 divided by my estimated production, that is 7050 minus 705. One 140.0496. Or we can say 97, whatever it is. So this is the value per unit into 180. So here it is 25,208. 209 we can take 25,209. So the balance amount of 6525 units. $913,824. Total 942.62. So process first account is ready, process second account is ready. The output of process first is transferred to process second and the output of process second is transferred to finished stock account. Here in the first part it is abnormal loss of 75 units and in the second process there is an abnormal gain of 180 units. So please copy the solution. Still, some part is left out in the question, so please copy this part and then we will discuss the other part of it. I'll solve all the queries related to this question after finishing this question. If you guys want, then I can prepare abnormal loss account and abnormal gain for revision also. I hope there is. Abnormal loss in this case account. My abnormal loss is 75. So 2 process 1. 75 units and 7260 is the amount. Now, my bank will sell these 75 units at a scrap value that is given in question at the rate of 12.5. So 75 into 12.5. 937.5. Balance will be transferred to costing P&L account. Let's keep it 938 only. So 720 is the value of abnormal loss minus 938. That is the scrap value we will realize. So 6322 will be transferred to costing P&L account. In this case, process second also we can prepare abnormal gain account. Now see, this is not actually asked in question. The question is not talking about prepare abnormal loss and abnormal gain account. I am just discussing this for your reference, for your understanding, so that at least you should be thorough with this part. Abnormal loss account, now abnormal gain account. Here the abnormal gain is 180 units is 25209. So by process second, (180 units 25209). As I told you, what is abnormal gain? Basically the saving in normal loss. So we will reverse the normal loss here. Of 180 into my scrap value, that is gain, that is 37.5. 6750. Balance will be transferred to costing P&L. So 25209 minus 6750. So 18,459. Please copy the solution fast. Now in this question we have to prepare process 1 account, process 2 account and finished stock account also. So let's prepare finished stock account. Now the finished stock of process second is transferred to finished stock account. So to process second, 6525 units. The value is 9,13,824. Now here in the given question, it is mentioned that only 6,000 units were sold and the balance is left out in stock. So no worries. Now we'll not write here sales since it is a finished stock account, not a P&L account. So we'll write by cost of sales, the cost of sales of 6,000 units. Now as the cost we have calculated is 140.0496 into 6,000 units. So it comes to 840297. The remaining 525 units will be balance left in stock. So we can say by balance carried down. So 6525 units total in this 6,000 were transferred to by cost of sales. Remaining 525 units, the value will be same 140.0496. $73,527. Please copy the solution. Now, so here in this question, the output of process 1 is transferred to process 2 and from process 2 transferred to finished stock. And the entire finished stock is not sold. Only a part of finished stock is sold. That is transferred to cost of sales. Now, since it is mentioned in question, prepare process first account, process second account and finished stock account. But see, it is written that these 6,000 units were sold at a profit of 15% on cost. So let's prepare a costing P&L or income statement also. Just like a normal P&L account, we can say cost of sales. From cost of sales, if you want, you guys can prepare a cost of sales account, and from cost of sales it will be transferred to costing P&L. So to cost of sales, 8,40,297. These units were sold at a profit of 15% on cost. So my cost is 8,40,297. 8,40,297 plus 15%. So it comes to 9,66,342. Now since we are preparing the income statement, we should also transfer that amount upon a value of abnormal loss and abnormal gain. So my abnormal loss is 6322. So here we'll write to abnormal loss 6322 and abnormal gain also by abnormal gain 18,459. The balance will be the net profit or net loss, whatever it is. So 966,342 plus 18,459, 98,480. So 138, 182 is the final profit. So I hope this part I have discussed till now is clear. Now this question covers everything right from start, the basic process 1, process 2, finished goods account. Second part, it also covers normal loss related questions also. That is in process first also there is normal loss of 5% of input, and in process second also there is a normal loss of 10% on inputs. Now this question also covers abnormal loss and abnormal gain also, and I have prepared abnormal loss and abnormal gain account separately. So I hope you guys are thorough with the concepts. So now, first of all, please copy the solution. So till now we have discussed the basics. We have discussed normal loss. What is normal loss? Inherent in nature. And unavoidable. What is the treatment of normal loss? The loss is absorbed by good units. Any scrap value realized will be deducted from the total cost. Now, abnormal loss. What is abnormal loss? Loss over and above normal loss. It is avoidable. What will be the accounting? What will be the treatment of abnormal loss? Value is same as of good units. And after deducting the scrap value, after deducting the amount realized as a scrap value, will be transferring the entire amount to costing P&L account. Next I have discussed is abnormal gain. What it is? We can say saving in normal loss. Or we can say we were expecting a production of 10,000, but we got the production of 10,200 units. So this is that 200 extra unit is abnormal gain. So after setting off the normal loss, balance will be transferred to So these all points we have discussed till now. We'll be moving towards the next part of chapter now. Before this, I'll address few queries raised by the students. There is a query from Payal Sharma, sir, abnormal loss and abnormal gain in P&L. Please explain again. Now see, the balancing figure of abnormal loss and abnormal gain is transferred to costing P&L. So that's why income statement is more or like a costing P&L only. Now, there is a query from Aman Agarwal from Lucknow. Can abnormal loss and abnormal gain account be made together? No, not at all. If in a particular process there is abnormal gain, then there will be no abnormal loss. And if in a particular process there is abnormal loss, abnormal gain is not possible. So we can't prepare abnormal loss and abnormal gain account together. And I mentioned, as I have discussed well in advance, that each process is unique and separate. So we prepare separate process account and all the related account to that process separately. Palak, sir, this profit calculation can't we do in finished stock account? See, the name itself says finished stock account. It is not an income statement. It is a finished stock account. So I hope in finished stock account we will not show any either of the profits or losses. It's simply a stock account. That is whatever the opening balance is. If any units are transferred and if any units are transferred to cost of sales, balance will be the closing balance. So it's a stock account. It's not an income statement. Now let's move towards the next part of the chapter. Admin, please focus on the PPT now. Valuation of work in progress. Moving towards the next part of chapter, again a very important point from examination point of view. In maximum number of times, examiner do ask questions from this part of the chapter, that is valuation of work in progress. So let's start. Now before starting, let's discuss what is work in progress. Now, what is work in progress? The work started but not finished at the year end is work in progress. Again I repeat, what is work in progress? The work which has started, we have started the work but it is not complete by the year end is what we call as work in progress. Suppose I started preparing shirt. Stitching and tailoring was done, but that buttoning part, finishing part is still in process. So we call it as work in progress. So now there are two methods generally we follow for valuation of work in progress. The first method, sorry. Now see, there are two methods for valuation of work in progress. First one is FIFO method and second one is weighted average method. FIFO method, first in, first out. Those units which were opening, those units which were opening work in progress will be transferred first, and thereafter the units introduced will be transferred in the next way. Let's discuss this with the help of an example. Admin, please focus your board. Suppose my opening work in progress is 1000 units and they are complete. They are 60% complete. Units transferred to next process. Say 10,000 units. Units introduced is say 12,000 units. The input is 12,000 units. The opening work in progress is 1,000 units, which are 60% complete. Now we have to transfer 10,000 units to the next process. Now, out of these 10,000 units, 1,000 units will be transferred from opening work in progress. And the balance units of 9,000 will be the units started and completed during the year. So if we want to transfer 10,000 units to the next process, it will be first from the 1,000 units, that is opening work in progress. Will carry on the remaining manufacturing activity of 40%. Thus it says it is 60% complete. So we'll carry out the balance 40% activity of these 1,000 units, and remaining 9,000 units will be transferred from the units introduced. So I hope it is clear. So FIFO method, first in, first out. That is, the first units which are available are 1,000 units, and these out of the total units transferred, 1,000 will be from opening work in progress and 9,000 will be from units started and completed. So this is what we generally do in FIFO method. Please copy. Now, next method, weighted average method. Next method is weighted average method. Now, under this method, no need to make bifurcation that boss, this is from opening work in progress and this is unit started and completed. No need to make bifurcation. Under this method, the cost of opening work in progress and the cost of current period are aggregated. What it is? Cost of opening work in progress. Now what we have to add? The cost of current period. Are aggregated and divided by the units transferred. Very simple. Let's take the same example. My opening work in progress was 1000 units. 60% complete. Units introduced 12,000. Units transferred to next process. Say 10,000 units. Now, no need to make bifurcation of this 10,000. Just simply write 10,000 units divided by 10,000. Now, cost of opening work in progress, that 60% work which has been completed. 60% work which has been completed in the previous year, we will write it here. The current cost, the balance work in progress 40% plus the extra cost of 9,000 units. It will be aggregated divided by 10,000. We'll get the value, and this is how we solve weighted average. I hope it is clear. Just give me a second break. So again I repeat, what we will do in weighted average method, write down the cost of opening work in progress, that is the cost of that 60% units which were produced at the beginning of the year, the 60% activity which was completed last year, write down the total cost, plus the cost incurred during the year, that is on these 1000 units the 40% cost will be incurred, so we will write down here, plus the cost of 9,000 units. Everything will be aggregated divided by flat 10,000. No need to make separate bifurcation. We have to calculate the weighted average cost. I hope it is clear. Please copy. We'll discuss this concepts of FIFO and weighted average with the help of one example, but let's discuss few concepts before that. Admin, please focus on the PPT. Now here it is written valuation of work in progress. I have already discussed. It happens in industries wherein the manufacturing is a continuous activity. We generally use two methods, that is FIFO method and weighted average method. FIFO method, under this method the unit completed and transferred includes completed units of opening work in progress and subsequently introduced units. Further, than weighted average method, under this method the cost of opening work in progress and the cost of current period are aggregated, and the aggregate cost is divided by output in terms of completed units. We'll discuss this concept with the help of an example, but before this, I just want you guys to explain the concept of equivalent production unit. Now, what is equivalent production? Generally, again, it is used in industries where there is some sort of work in progress. So now, what is the concept of equivalent units? See, I have mentioned it in an example. See, 40% of work has been done. If 40% of work has been done on an average of unit till under process, and then 1000 units will be equal to 400 completed units. and the cost of work in progress will be equal to the cost of 400 finished units. Let's see, admin, please focus over the board. So here it is written, if 40% of the work is completed on say 10,000 or 1,000 units. If 40% of the work is completed on 1,000 units, if 40% of the work is completed on 1,000 units, then the equivalent number of units will be 1,000 into 40%. That is 400 units. Same, suppose if 70% of the work is completed on 10,000 units, the equivalent number of units will be 7,000. I hope it is clear. We'll discuss this equivalent production, opening work in progress, work in progress, FIFO method and weighted average method with the help of one example. So let's start the example first. Till we have time, we can finish off this example. Example number 5, equivalent basic example. Now see, following information is available regarding process A for the month of January 2020. Again I repeat, following information is available regarding process A for the month of January 2020. The production records are given unit in process as on 1st January 2020, that is opening work in progress, is 4,000 units. Opening work in progress is 4,000 units. New units introduced, 16,000 units. Units completed, 14,000 units were completed and transferred to the next process. Closing work in progress is also given. That is 6,000 units. Material 100% is utilized and labor and the overhead work is still pending. So it is 33% only completed. Cost records are given relating to opening work in progress, that is material, labor and overheads. So total is 8,000. Cost during the month, that is the cost incurred during the year, is given. Material is 25,600, labor is 15,000, overheads are 15,000. In total 55,600. Prepare statement of equivalent production. First you have to prepare statement of equivalent production. Second, statement showing cost for each element. Next, statement of apportionment of cost. And fourth point, the process account for process A, using both FIFO and weighted average method. So once the question is over, I have got a query. The PPT is not visible. Sir, please, admin sir, please check the PPT is visible to everyone. I have shared the questions in the study material. It is already uploaded. Please check the PPT is available, admin sir. Admin sir, the PPT is visible. Please check. One second, guys. Now see, hopefully the PPT is visible now. Following information is available as regards the process. I've already read the question. Now admin sir, please focus over the board. This question is very important from examination prospect. This concept is very important from examination prospect. So please focus it over the board. 1 second sir. So now please focus 100% over the board. This question is available on study material already uploaded. So please focus again. It's a very important concept from examination point of view. So I'm starting equivalent basic example number 5. Now see, the first point they have asked is statement of equivalent production. So we'll be preparing using FIFO method first and then the weighted average method. I'll be resolving the queries during the questions only, so that after every step I'll be resolving the queries, so you guys can ask the queries. I'm talking about example number 5. Few questions are asking that the PPT is not visible, Pooja. So it is question number 5, Pooja. Let me check that the PPT is visible or not. Just give me a second. You guys can check the study material. It is already uploaded on the website. PPT is not required much. I'll be focusing, most of the focus will be over the board only. So I suggest you to download the study material and refer example number 5. Please refer example number 5. Harita, please refer example number 5. Now I am solving this with the help of FIFO method. So statements showing equivalent production. Now, particulars, total. I'm taking a very basic question. Particulars, total, material. Since the labor and overheads percentage of completion at the beginning of the year is 25%, at the end of the year 33%, for both is same. So I am writing in combined form labor and overheads. Let's say if the labor is 25% complete. Let's say if the labor is 25% complete and overhead are 40% complete, then we have to take it separately. Now, let's prepare a very basic account just for our calculation purpose. The opening work in progress is of 4,000 units. Opening work in progress is 4,000 units. New units introduced is 16,000 units. Units completed. Units completed is 14,000 units. Closing work in progress is 6,000 units. So we can see there is no normal loss, abnormal loss and abnormal gain. The opening work in progress is 4,000 units. The new units introduced are 16,000. Out of this total 14,000 units were completed and transferred. And closing work in progress is 6,000 units. Now since we are doing this with the help of FIFO method, so this units completed and transferred of 14,000 units, it will be 4,000 from the opening work in progress. Again I repeat, the total units transferred are 14,000 units, of which, since it is a FIFO method, so the opening work in progress of 4,000 units will be transferred first, and then remaining 10,000 units will be from units started and completed. I repeat again, since the units completed and transfer are 14,000. So from 14,000, 4,000 units will be from opening work in progress and remaining 10,000 units will be from units started and completed. So let's start the equivalent production state. So now, units transferred. 4,000 units will be transferred from opening work in progress, right? Now, these 4,000 units, let's see the percentage of work completed. The material is already 100% complete. This month, nothing to do with material because material is already introduced in 100% capacity. So do we have to incur extra cost for material? No. Now here in the given case, the labor and overheads are complete by only 25%. So remaining 75% we have to complete this month. So we'll write down 75%. I repeat again, since we are just calculating the equivalent production units, the opening work in progress is 4,000 units. The material part is already completed in the previous month. So in this month, nothing to incur over material part. As far as labor overhead is concerned, it is already completed up to the extent of 25%. So balance 75% we will be completing in this month. So 4,000. So equivalent number of units will be 3,000 units. Now, opening work in progress is sorted. Now they are ready because 100% material is already done. 100% material work is already done in the previous month. This month, nothing to do with the material part. Yes, the labor and overheads were 25% complete in the previous month. So in this month, the balance 75% will be completed. Now next. Units started and completed. This part. Units started and 10,000 units were started in this month. 10,000 units were started in this month and completed during the same month. So 100% material was consumed during that on 10,000 units. So equivalent number of units will be 10,000 on material, and again labor activity and overhead activity were also 100%. So equivalent number of units for material, so for labor and overhead will also be 100%. So total 14,000 is over now. So we have done the bifurcation, we have calculated the equivalent units of 14,000 units that were transferred. Now, there are some more activities done during the month. That is the work in progress at the end of the month. We call them as closing work in progress. The number of units of closing work in progress. The number of units on closing work in progress is 6,000. The number of units in closing work in progress is 6,000. Now, we have completed 100% material on closing work in progress this month. See, here I have written dash dash. The reason is why? Because in previous month only the material activity was completed. In this month, only 75% of labor and overhead activities were pending. That's why I have written 75. Because 25% was already completed in the previous month. But this closing work in progress, that is, it is started during the year. And we have done 100% on material, that is 6,000. And labor and overhead is 33% completed during the year. It is 2,000. I repeat again, guys, please focus 1 second. I repeat again, opening work in progress is 4,000 units. 100% of the material part is already completed in the previous month. The labor and overhead 25% is already completed in the previous month. We have only completed 75% of activities this month on labor and overheads. Units started and completed, everything was done in this month. That's why 100% and 100%. Closing work in progress, 6,000 units. Now here it is written that 100% activity was done in this month, so 100% is 6,000 and 33.33% is done in this month for labor and overhead, so it comes 2,000. 1 second, let me address few queries. Can't see properly. Admin sir, please check what's the issue. Admin sir, please check what's the issue. कौन सा वाला? Process वाला part? Yes sir, 1 second. There were few queries from the students that the right hand side was not visible, so I'm just writing it here for your reference. Thereafter I'll delete it. Before starting with the statement, you have to prepare a rough process account. Opening work in progress. Okay. सर ऊपर वाला प्रॉपर दिख रहा है सर? Opening work in progress is 4,000 units. Units introduced. Units introduced are 16,000 units. Units transferred. Units transferred are 14,000 units. Closing work in progress is 6,000 units. Now, why I prepared this memorandum account? Just to explain that, just to check out that whether there is any abnormal loss, abnormal gain or normal loss. So that's why I prepared this. In this case, in this question, there is no point of normal loss and abnormal loss because total units introduced were 20,000. Out of this, 14,000 were transferred and 6,000 were at the end of the year. Now I want to explain these 14,000 units which were transferred. These 14,000 units which were transferred were from 4,000 from opening WIP and 10,000 units from during the year. I hope it is visible to all now. Admin sir, it is visible. So I repeat again why I prepared this statement to check out that whether there is abnormal loss, abnormal gain or normal loss if any. So in total 4,000 units were opening work in progress, 16,000 units were introduced at the beginning of the year, at the beginning of the month. So total 20,000 units, out of this 14,000 units were transferred and 6,000 were closing work in progress. Now back to the question. Statement showing equivalent production. My opening work in progress was 4,000 units. The material activity was already completed in the previous month. The labor and overhead activity were completed up to 25% in the previous month. So 75% activity we will be completing in this month. Units started and completed. All the units of all 10,000 units were started and completed in this month. So 100% of material labor was utilized, 100% of material was utilized, and 100% costs were incurred on labor and overheads also. The closing work in progress part, 6,000 units were closing work in progress. That is, the units started but not completed by the month end. Again I repeat, the units started but not completed by the month end. That is 6,000 units. So 100% material was already provided, so 6,000, and labor and overhead activity were completed up to 33.33% only. So 6,000 into 33.3333%, that is 2,000. So total equivalent number of units in material is 16,000 and in labor is 15,000 units. I hope this statement is clear. Let me check few queries. Okay, great. So I hope till now everything is clear. Statement showing equivalent production. Why I am focusing on this question? Because it is very important from examination point of view. So first of all, just prepare a memorandum process account to check out whether there is abnormal loss or abnormal gain or anything like that. Thereafter, prepare statement showing equivalent production using FIFO method or weighted average method, whatever it is. I suggest you to please copy this part because such type of account is not actually given in PMN or module, whatever it is. So please copy it. I am going to rub it now. Now, the next question, statement of equivalent production is ready. Now, statement showing cost for each element. These are the elements: material, labor, and overhead. So we have to prepare a statement. See why I am going step by step, because the institute requires proper presentation also. You can't go like this way or that way. Whatever the question is asked, answer in the way they want. So statement showing cost for each element. We are preparing the second statement. So three elements are there. Material is there. Labor is there. And overheads. Now, the overall cost incurred during the month. Cost incurred during the month. On material, we incurred 25,600 rupees on material. 15,000 on labor and 15,000 on overheads. Again I repeat, we have incurred a cost of 25,600 in the month of January. On labor, 15,000 cost and overhead 15,000 cost. Now, how many equivalent units we produced in January? 10,000 units were 100% started and completed. Now, nothing was done on material in opening work in progress because it was already completed previous year. But yes, in closing work in progress, 100% material costs were incurred. So that's why I wrote 6,000 units. So overall, 25,600, the cost is incurred over 16,000 units. Equivalent units, 16,000 units. Again, labor, we have completed 75% activity on opening work in progress, 100% activity on labor and overheads for units started and completed, and in closing work in progress only 33%, 33.33% of the work was only done. So 2,000 units. So overall, this 15,000 cost is for how much units? How much equivalent units? 15,000 units. Again, the overhead also 15,000 units. Again, I repeat, this material cost of 25,600 units was incurred on overnight average 16,000 units. This labor cost of 15,000 and overhead cost of 15,000 were incurred on 15,000 units only. So we can say cost per unit will be what? 25,600 divided by 16,000. $1.6. Again 1. And again 1. So we can say this is statement showing cost for each element. I hope it is clear till now. I just want a minute break. So I hope this part is clear now. Again, statement showing equivalent production. This part and statement showing cost of each element. Now, I'll address few queries asked. Please write big, write big. Guys, I'm extremely sorry that that font size is not adequate. I'll try to fix up the font size in the next session. Now again, Nikun Singhal has asked a query that in example number 1, why don't you consider indirect expenses? I'm extremely sorry, Nikun. I actually skipped that part in the question. These 85,000 indirect expenses are to be apportioned in the ratio of direct wages. I really skipped it. Sorry, I'm extremely sorry. It's my apology for the same. Rest all more or less, everything is fine. So I'm finishing off this session for today. I suggest, I request you guys to practice these questions, the basic questions, plus this statement. The remaining part of this question I'll be finishing in the next session. But before that, I want you guys to be thorough, conceptually thorough with that part. So that it will be very easy for us to fix up. To complete the things in the next session. So thank you guys. And if there are any mistakes, writing mistakes, so please do consider me. Thank you very much for that. We'll surely try to fix up the board issues or the font issues in the next session. Till then, thank you very much. Thank you very much, guys.